Hey everyone, Eddie here. So today I just wanted to talk a little bit about what do you call it? A short rate trade. Dollar index. Yes. Oh, just collect my thoughts there. Dollar index. That's what I want to talk about. The reason for that is I was looking for some opportunities in the market. What is out there? If you look at the ES chart here, it has gone through the roof, right? Top right, hockey stick kind of style here. I'm a little bit scared and skeptical about selling calls here. Usually, I would sell the hell out of this, on the top side. But I mean, I haven't traded a short call spread in any of these indices for a while now. I think almost after getting hurt in these indices beginning of this year, I don't think I have traded short calls in these anymore. Um, but it is a trade I like. It's just that I don't want to do it right now because the volatility is not there, and there's a lot of positive drift in the market. So I would rather stay away from that. So what else is out there? I was looking at. I mean, all of these are like none of these are like extreme levels yet. So indices are up, fine. If I look at oil, I just finished an oil trade. It's not at an extreme. It is trading around. I don't know. Yeah, I mean it's on the downside. I sold a put spread. I made some money here, but then I got out when it was around 70-ish. It hasn't moved up, too much. Anyway, one thing I was looking at, euro currency. Now, before we look at euro currency, I want you to understand the dollar index because that's how these currency pairs are affected. So I wrote a little note here. If I can bring it up in my very slow computer. And I want to send this out as a note as well. But here's what the dollar index is made up of. First of all, also let me tell you that you can track the chart of the dollar index by just putting a symbol in there as dollar DXY. This is the dollar index chart. And if you want to go back and look at like last 10 years of history, let's look at last 3 years, right? Look where it trades at. It has been trading around 104, 103, and that's because it was COVID time. Markets were recovering, so dollar was high because the rates were high. Um, anyway, I wanted to cover this. Like, what? How does this move? How does this thing move? Why was it at 114 back in September 2 years ago or something? Um, and where is it right now? If I have to move back and come back down, it's back to its 100 level. That's where it started. Dollar index started at 100. It's made up of six currencies. Very, very quickly, it's made up of six currencies. It was launched in 1973. After some agreement was collapsed, whatever. I don't know about that, but it started at base 100 with these weights. So these are fixed weights, approximate fixed weights in this index. These weights do not change. Well, yes, they do change when the values go up and down, but they're approximately the same. So the biggest component of this index is euro. So if euro moves, the index moves, or the index moves, the euro moves. So I always look at the DXY index, the level that it is trading at. Because it started at 100, it has usually traded around 100 unless the dollar has been really strong, which it was for the last 2 or 3 years when the rates were really high. When the rates are high, people invest in dollars. They want to buy dollars. They want to buy dollar denominated assets so that they can collect that higher premium or higher coupons. And because of that, this index goes up, and everything else has to go down. All the other currency pairs that are attached with it has to go down. Now, if you must have noticed here, like two of the biggest partners, US's trading partners, which are China and Mexico, are not part of this index. So this index is really a little bit outdated for me. Trade measures here because China and Mexico are not part of this index. This was created like 30, 40 years ago, right? It's really outdated. But that's what it's a really good benchmark to look at right now. That's what people use. Anyway, there's a formula I've put down here. You can just see it's based on the average weighted component of each currency, plus there's a multiplying factor in there. This is how the index is actually calculated. So you can see that it's basically affected by its if I can just increase the size of this, you can see it's basically affected by the weight of its components, obviously. And then it just indicates the strength of the dollar. So if you look at last one whole year, let's go back here, July, last few months, fine. July was around 105, then it traded down because that's when people started talking about rate cuts. Now, when the Fed, you know, when the rate cut talks were like going around, that's when this index started to drop because now people are positioning themselves like for a rate cut. And when the rate cut happened a couple days ago, now you look at this thing, it'll just completely come down to flat, right? Now, when this thing comes to flat, which is 100, other things go up on against it, right? So look at the 6E ticker. So the 6E ticker basically ticked up a little bit last few days. So sorry, this is 6M. I'm showing you the wrong one. Where is it? 6E. There you go. So this is the 6E index. Now 6E has been trading in a zone. Good thing to trade. I just traded it. I got some money back in this. I was losing. I was year to date. I was down in this ticker, but I am positive now. After trading this, and actually I'm managing the trade now. I really want to do a video on it, but I'm not getting enough time to do it because I want to show you, like, what did I do? Anyway, I wanted to show you the ZB trade first. I did a couple of days ago. I sold it at 10. I was short bonds. Traded this on 920. Couple of days after the Fed announcement because the market was at an extreme, I believe. It had run up too far too quick. Let's change ZB. Why am I looking at this chart weekly? I want to see weeklies. I usually do 1 year, 1 day. That's what my go-to is. Okay, so yeah, I think I traded this out of the top. Around when it was 127, I sold a 131 call. So I sold it here around 131. And then I bought 130. I think that's what the trade was. Let's go to Mars. Yes, here. 130, 131. And I think I talked about this in my previous video as well before the Fed announcement. I said, this is what I'm looking at. This is what I'm going to trade. And I actually got time to do it. So I put this on. And then this morning I took it off because I made 5 ticks on it. So 5 ticks is basically each tick is 15. This was my I was trying to calculate, like if I wait until 6 ticks, but the market gave me at 5. 5 at 15.625. So that is around $78, and I paid $9 in fee. So I made, 69, less than $70, and I paid down $300 on this. So that's, trying to average it out is 20% return on one trade. Again, you have to annualize this thing, right? You have to trade this often to be positive and be everything in it. Anyway, I just want to show you the 6E trade that I've been trading, and this is what I'm looking at right now. And it's fine if my video goes, a little bit over the mark. Now, I'm just checking. Is this no? This isn't showing me everything. I want to go back. Let's say 290 days. Let's see. What does that mean? There you go. So you can see, right? You see this. A lot of back and forth. I was stuck in a trade. I was losing it a little bit. Down year to date, but this is everything that has made me money. Now, if I have to calculate the buys and the sells here, this is a positive number around plus 200 or maybe plus 150 or something. I don't remember exactly, but I'm gonna do a video. I'm just showing you right now here what I have done. Like I said, when I say my strategy is to go in short side, so you will see every time I open a trade, I open with just one side of it. It's not showing you anything prior to 531 because it was just that Schwab TDA thing. But this iron condor that you see, the first one here, it's basically an adjustment that I made. So from a credit spread, I went into an iron condor, and that's what I teach in my course and everything. In my upcoming free trading cohort as well, that's what we're doing the exact same thing. We want to teach you. Look, it's here. So and this time we're only doing the credit strategy here. One strategy, one focus, one everything. We just want to make sure that you guys all understand what we do and how to put these things on. Our core option strategy, that's all we're going to talk about for 1 hour and 30 minutes with 15 to 20 minutes of Q&A session. Credit spreads, and that's what I do all day long. Sell a credit spread and then adjust it. So here, you're actually looking at adjustment here, which I have turned into a iron condor. Then this is a buy to close, so I then bought back my. I'm just going through the trade here. You don't have to follow it with me. I just bought back my call side because it dropped, right? So I made some money on the call side, so I took it off. Then, and then I moved it. I moved it into the June cycle. From May, went into June. Stayed there, did a couple other adjustments, whatever, turned this into, bought back the iron condor again, and then I was sitting at a negative P&L, and then recently decided to trade again. Overall, I need to do the math here, but I am positive. That's what the idea is to show here. The next trade I am looking at is a 6E trade. Look at this euro currency, right? It's down a little bit. But it is at its highest levels here. 1.12, fine. Actually, the recent trade I did, where did I sell it? I think I remember this trade very well. So let's look at the July trade. I sold calls, then I sold puts. You see this? I sold calls, and I got tested, and I got sold puts. And then because the market was like up so much, I sold another call at 1.12. And that's where it's trading right now. I remember selling it at 1.14 at 1.2. So if the market goes up on me, actually this is the trade. This is the very recent trade where I've made quite a bit of money here. Look at this. Follow this thing. Only this thing. So I started on 8.16, right? Selling a call spread. Didn't work out. I had to sell a put spread. Converted this into an iron condor. Fine. But the market was up so much, I just wanted to sell, the hell out of it. So I sold more calls. Juicier calls, because the market was up quite a bit. So look, on my initial call spread, I collected 13 ticks. Then I collected 12. On the put side, I collected 12 again. So that's like 24 and then 13. That's like 37 ticks already, right? Now, if you deduct the debits I paid 14 ticks here. Then I paid 11. So that's 25 ticks. Then I paid only 3 ticks here. So 28. And I made, I was negative. I sold it for about 37. So, I made like 10 ticks in this. Each tick is like, I don't remember exactly, but yeah, it was above $130, $140. Anyway, that's how we do. Sell one side. It doesn't work out, sell the other side. And this extra call spread was done for no extra buying power. So this one here was done for no extra buying power because my buying power was already tied up in this trade. So actually, mainly just in this trade, then there was no buying power for this one either. And then additionally, I collected more premium, but my buying power was just the same, exactly the same. It did not change at all. So that's how it works. If your buying power, this is how you do it. Anyway, this was a good trade. So look, I sold the call spread here for 12 ticks, bought it back for 3.5 ticks, right? So that's a good 9.5 ticks in the pocket. And then the other spread, so I sold this one for 13, bought it back for 11. Then I sold the put spreads for 12, bought it back for 14. So I took a little bit of a loss on this one, but then made a profit on the remaining two, right? Anyway, why am I showing you this? Because I think there's a trade here. Let's go back. So in order to trade this, I have a good, nice expiration cycle. Now, this is just an idea in my head right now. It hasn't really conceptualized in my head yet that I should do this, but I will eventually. Now, look, I'm getting a 115, 116 deltas here. 115, 116 strike. Let's see how much credit can we collect here. Now, the reason I'm doing this, 2 reasons. One, the market is at its extreme right now, up quite a bit. And then the dollar index has basically flattened out. So yes, the dollar index goes below and then the euro can go above, but I think the rate decisions are done. The traders, the market, and the street have actually taken their positions. It's around 100. I was actually waiting for it to be at this level. It finally is. So I'm going to take a short side on the call, short call side. And let's see how that goes. I mean, if it doesn't work out, we sell the put side. Anyway, I need to show you the trade I'm looking at. Will I put this on? When will I put this on? I'm actually going to put it on right now. Let's see. 115, 116. I'm connecting 9 ticks. A little bit on the low side, but maybe I can leave the trade in there. But let's see the probabilities first. I always check. I always do this. Make sure you change your break-even slices and change your day here as well. 11.9. Where's 11.9? Was it 11.9? What was it? Yeah, 11.9. Okay, why am I 15? 11.8. Great. Okay. 80% probability of profit. Great. I like the number 80 in front of that thing. How much money am I collecting? $112. maybe I can go for another tick. 125, fine. We'll look to collect, we'll look to keep $75 to $80 of this in our pocket. We can go closer to the market. Also look at the volatility. Now volatility is basically tamed out. It's basically down to its lows. There's nothing going on, which means I think, the market will stay a little bit on its side. It's not going to go anywhere from here. But so let's take a look. I'm going to put this in for 10 ticks. 115, 116 level is my comfort zone. Okay, here, $256. Perfect. I'm paying $450 and 3. I think I'm still paying higher commissions here. I need to talk to my providers here, like just to see if I can do a better thing. Anyway, that's the trade. I hope you like it. Any questions, let me know. Take care. Bye-bye.